Inflation remains a key preoccupation for financial markets right now, not to mention central bankers, politicians, economists, and most importantly of all, consumers. And we will get the latest updates on this topic from America and China, the world's two largest economies, on Wednesday the 10th of November. A classic inflationary cycle tends to start with rising commodity prices, then rising factory gate or producer prices, then rising consumer prices as corporations try to defend margins and put up prices, and then finally rising wages. Here, we're going to look at stages 2 and 3 of that cycle. In China, in September, producer price inflation, or PPI, reached 10.7% year on year, the highest figure since records began in 1999. And consumer price inflation, or CPI, well, actually that eased to just 0.7%. Now, that lower CPI reading does look encouraging, but a lot of that drop was down to a 47% year-on-year drop in pork prices and an overall 5.2% drop in food costs. China was hit by a big outbreak of blue ear disease in 2020. That hit pig herd numbers and drove up pork prices. Now we're seeing the opposite, and there's been a base effect to the CPI figures as pig supply increases. Now, the PPI number's less good, as it suggests there may be some pent-up price increases coming down the pipe, and that China could start exporting that around the world, even if right now President Xi and the Communist Party are trying to cool the economy as best they can, to at least to rein in property and financial speculation. Over in America in September, producer price inflation reached 8.6% year-on-year, a 13-year high, and consumer price inflation accelerated to 5.4% year-on-year, also the highest mark since 2008. Now, it's intriguing to see 2008 cropping up there as a date, as that was the year that the global economy really hit the buffers as the great financial crisis broke. Let's hope that we don't see a repeat this time around, and at the moment, if anything, the signs are there could be more inflation in the pipeline. America's Bureau for Labor Statistics shows not just the headline PPI index for goods and services in final demand, but also for intermediate stages of the production process. Now, rather scarily, price increases there last month, or at least in September, were as follows: 11.9% for stage 4, the last one, 20.2% for stage 3, 22.7% for stage 2, and 19.9% for stage 1. And, hold on to your hats, for unprocessed goods, raw materials and commodities and the like used in the intermediate stages, well, the price increase in September was 46.9%. It seems logical to expect at least some of that to filter through going forwards, but we'll see. Now, on the company front back home, around a dozen FTSE 100 firms are scheduled to release results or trading updates or hold an analyst meeting in the week ahead, and a good number of mid and small cap companies are due to do the same. Names which may be worthy of further study include the following, although as usual, some of these dates could yet be subject to change. Dignity on Monday the 8th of November, Meggitt, DCC, Direct Line and a pair of house builders, Vistry and Persimmon on the 9th, ITV, Aveva and Grafton, as well as retailers Marks & Spencer, ASOS and Halfords on the 10th, Burberry, Aviva, 3i, Auto Trader, WH Smith and another house builder, Taylor Wimpey on the 11th, and pharmaceutical giant AstraZeneca will then round out the week on Friday the 12th of November. But the company which could just cause the biggest fuss in the week ahead is Associated British Foods. The owner of Primark, British Sugar and Twinings Tea is due to report full-year results at the end of September on Tuesday the 9th of November. Shares in AB Foods are up 9% over the past year, pretty much exactly 12 months since Pfizer announced its successful COVID-19 vaccine trial, and that's not bad. But they are down by more than a quarter from their April high. Now, there wasn't much wrong with the first half results back in April, when the FTSE 100 firm returned to the dividend list, or the fourth quarter trading update in September when it upgraded forecasts for the year. Yet the shares have refused to listen, and this may be down to three factors. Some disappointment over Primark's fourth quarter showing, when sales were still 17% down on a like-for-like basis against July to September 2019, before the pandemic. Management cited the pingdemic in the UK, weak tourist traffic in Iberia, and French requirements for the pass sanitaire for shoppers as reasons for that slightly disappointing showing. There are also perhaps concerns over rising input costs and whether they could hit profits and margins in the year to September 2022. And also concerns over supply chain bottlenecks in ports, truck depots, and goodness knows where else, and whether they'll affect Primark's high stock turnover operating model. Management no doubt will be expected to comment on all of those, and when it comes to the numbers, analysts will quickly turn to three headline figures, for both for the year just ended and also for guidance for the year that's just begun. Sales are expected to come in broadly flat on a stated basis at £13.3 billion, before advancing 18% to £16.4 billion in the new financial year to September 2022. Earnings per share are expected to reach 69 pence against 58 pence on a stated basis, and on an adjusted basis slightly exceed last year's 81.1p a share, excluding the repayment of furlough cash. And dividends per share, well, they're expected to reach 26 pence, so that implies a final payment of 19.8p to follow on from the interim distribution of 6.2p a share. By division, for the year just ended, management has guided as follows: higher sales but lower profits at grocery, higher sales and strongly higher profits at sugar, higher sales and higher profits at ingredients, lower sales and higher profits at retail. A stronger pound was forecast to shave some £35 million off profits, while AB Foods has targeted it predicts a 31% tax rate. Interest costs, lease expenses and other financial items were expected to come in lower than last year, and watch also for comments on those and guidance for those for the year ahead to September 2022. Hope that you and your families are in good health and good spirits. Thank you for watching. It's been good to see you again, and I look forward to talking to you again next week.